Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. Today, we're going to get into some details on a specific investment. We're going to talk about municipal bonds. And there's a reason why we're specifically talking about municipal bonds. They have some great tax advantages. Plus, recently, the interest rate on municipal bonds has increased a bit. So that gives us a little extra opportunity. Now, we're not going to dive into all the dynamics of bond trading and what's going on in the economy right now and why municipal bonds might have increased in interest rates recently. It's just been a nice thing that we can take advantage of now. And it's not that the interest rate is shot up to something crazy, but it's gone up enough to where it can be a little extra helpful now for our retirement planning. So municipal bonds are issued generally by state and local governments. You can have different types. You can have a municipal bond for a specific project. You can have a general obligation municipal bond. But regardless of the type, we just need to understand that municipal bonds are issued generally by state and local governments. They pay out interest, and they have tax advantages whereby the interest on that bond is not taxed at the federal level. Additionally, if you buy a bond in state, it will not be taxed, the interest will not be taxed at a state or local level. Now, if you're in a state that doesn't have income tax, you don't have to worry about that last piece. You can buy in any state and it doesn't matter because all you're looking for then is the federal tax exemption from the interest income. So we are in Missouri. If we buy a Kansas City or a Springfield or a St. Louis municipal bond, or really anywhere in the state, if we buy a bond in the state of Missouri, we are exempt from tax on the interest at both the federal and Missouri level. It's a great thing to have when we're talking about needing bonds for income in retirement, and we're doing this outside of an IRA account. Because think about it, if it's inside an IRA, we don't need any exemption from the interest income because the only time an IRA is taxed is when you take the money out of the IRA. So all the activity, all the buying and selling and interest income and dividends, everything that happens inside of an IRA, there's no immediate tax on that. You're only taxed at ordinary income when you take the money out. So when we talk about municipal bond investing, that is done outside of an IRA account. Therefore, if you have an individual account or a joint account with your spouse or a trust account, anything where the activity of that investment is going to be taxed annually, this is where municipal bonds can come in. If we are using that account for all or part of the retirement income, and we're using these bonds for income in retirement, now, especially with the little higher interest rates for municipal bonds, we can use that and use that in a tax-savvy way to get interest from these bonds that is free from federal and most likely, if you do this properly, free from state income tax as well. Now, one of the arguments against using municipal bonds is that the interest rate is generally lower than what you would get in other bonds. And that interest rate is lower because of their tax exempt status. Now, how do we square this up? Well, the fact is that municipal bonds are not for everybody. But if you are in a higher federal tax bracket, municipal bonds can work well for you. If you're in a lower federal tax bracket, the municipal bond might not be as important because instead you might want to get the, let's call them regular bonds, whether it's a treasury bond or a corporate bond. You might want to get a more regular bond because it's paying out a higher interest rate and you're in a lower tax bracket, you don't really care as much about the taxability of that interest. Whereas if you're in a higher income tax bracket, you very much care about whether or not that interest is tax deductible. So even though the interest payout might be a little bit lower, you could get a higher effective interest rate by having it not be taxed at all. So again, you need to look at your tax situation and see, am I in a high tax bracket or am I in a low tax bracket? If I'm in a high tax bracket, I'd probably want to lean more on the municipal bonds. If I'm in a low tax bracket, I might not need municipal bonds. I might want to go with the bond that has a higher interest rate. Since we're talking about retirement planning, it's important to also remember that when we're using bonds for income, we are looking for high quality. We're not looking for junk bonds. We want something that's at least investment grade. Personally, I tend to use AA or AAA. Sometimes we'll go to single A. But when we're talking about bonds for income, first and foremost, we want to know that we are going to get paid back, period. And there's nothing that's absolutely risk-free. But if you're getting AA and AAA bonds, it's pretty darn low risk. So let's focus on the quality first. Then we can look at the tax advantages and whether or not we need treasuries and corporate bonds that might have a higher interest rate, or should we use these municipal bonds that may have a lower interest rate than the corporates and the treasuries, but they're not going to be taxed in an account that is outside of an IRA. Really important to know that we have some tax advantages that we can use if we're not using an IRA for these bonds for income. It's just so there's so many tax items that are overlooked that are easy to do, and municipal bond investing is an easy one to do. It's not too challenging to switch from a traditional corporate bond or treasury bond over to a municipal bond and use those if you need that income tax to be free on that interest. One important note: any capital gains or losses on the municipal bond are taxed just as they would be on any other bond. So that's just important to note that it's the interest that is taxed, that is not taxed at the federal or state level, but any gain that you have. So if you buy the bond at a discount, let's say you buy it at 96 and it sells for 100 when it matures, that gain is still taxable at both the federal and state level. It's only the interest that is saving you on taxes. So just be mindful of that. You might want to buy something with a higher interest payout that maybe is not paying it as big of a discount, if that makes sense. We're not going to get too into the weeds on the bond trading because we've done other videos on that in the past. But just know that the capital gain, if there is any on that municipal bond, is still taxable, but it's the interest specifically where we can get some tax savings if we are in a high tax bracket and using a non-IRA, either an individual or joint or trust account, where that activity would otherwise be taxed. So keep that in mind as we're looking at bonds for income and retirement. If we're in a high tax bracket, definitely take a look at municipal bonds and being able to purchase individual municipal bonds in your non-IRA account for those tax advantages. Thanks so much for tuning into this episode. I really appreciate your support and hope you found value in the conversation. If you enjoyed it, be sure to subscribe, leave a review, and share it with someone who might benefit from it. Your feedback helps keep the show growing. Until next time, take care and stay strong as we learn to retire with peace.